Module Overview. In today's fast-paced financial environment, budgeting is no longer limited to historical record keeping and static projections. Instead, modern digital budgeting tools now empower individuals, entrepreneurs, and corporations to forecast future financial trends, simulate various financial scenarios, and engage in strategic financial planning with dynamic inputs. These capabilities make budgets living documents rather than rigid financial outlines. Module 4 takes you deep into the world of financial forecasting, what-if scenario modeling, and strategic cash flow planning using budgeting software. You will explore how forecasting can help preempt risks, prepare for opportunities, support decision-making, and optimize the allocation of resources. It will also review best practices, automation features, AI-driven forecasting models, and real-world applications across personal finance, startups, SMEs, NGOs, and enterprise finance.
Section 1. Introduction to Forecasting in Budgeting Software. Forecasting is the forward-looking process of estimating future revenues, expenses, cash flow, and financial performance based on historical data, assumptions, and economic indicators. Modern budgeting tools such as QuickBooks Advanced Float, Jira Plan Guru, LivePlan, Oracle NetSuite, Microsoft Dynamics 365 enable accurate and real-time forecasting via AI-assisted prediction, dynamic inputs, financial templates, scenario layering. Section 2. Types of forecasting in budgeting platforms. Short-term forecasting duration, daily, weekly, or monthly. Focus, cash flow, bill payments, income arrival. Ideal for freelancers, small businesses. Medium-term forecasting duration, quarterly to semi-annually. Focus, operating expenses, seasonal trends, growth tracking. Ideal for SMEs, NGOs, grant planning, long-term forecasting duration, 1 year to 5+ years. Focus, expansion goals, investments, debt reduction, sustainability. Ideal for enterprises, investors, public institutions. Section 3. Scenario planning. What-if modeling. Scenario analysis involves simulating multiple future outcomes by altering variables and assumptions. Most advanced budgeting tools allow you to create what-if financial models that show potential impacts of different decisions. Examples of scenarios. What if product sales increase by 20% in Q2? What if operating costs rise by 10% next year? What if a new investor contributes 10 million naira in funding? Budgeting platforms like Jira, Planful, Adaptive Insights, and LivePlan allow side-by-side scenario comparisons, layering optimistic, pessimistic, and expected models, linking assumptions across multiple departments, real-time updates with adjustable drivers, common forecasting variables, income growth rates, customer churn, hiring/firing projections, inflation/deflation, tax rates and subsidies, inventory cycles. Section 4. Forecasting tools and functionalities. Here's how modern tools support forecasting. In this module, we will be using feature, description, and example tools in our table. 1. AI-powered predictions. Machine learning algorithms that suggest likely future outcomes based on behavior and market trends. QuickBooks, Xero, Zoho, Tiller 2. Custom forecast templates, industry-specific templates for SaaS, e-commerce, real estate, NGOs, LivePlan, Vina, Cube 3. Assumption modifiers, easily editable inputs like revenue per customer, salary increases, cost of goods, Plan Guru, Adaptive 4. Rolling forecasts, automatically updates forecasts with every new month's data. Jira, Vina, Microsoft Dynamics 5. Visual scenario graphing graphs of different what-if conditions, e.g. 10%, 20%, 50% revenue drop. Pulse Float 6. Integrated cash flow modeling. Predict future liquidity and help plan for deficits or surpluses. Float Finmark QuickBooks. Section 5. Strategic planning through forecasting. Strategic financial planning is the end goal of forecasting. It aligns your future budget with vision, goals, and performance targets. Benefits: proactive resource allocation, growth trajectory visualization, investor confidence, early identification of funding gaps, Evidence-based decision-making application cases. Startups use 3-year forecasts to raise funding from VCs. NGOs use scenario planning to manage donor fluctuations. Corporates use rolling forecasts to steer departments toward annual KPIs. Section 6, integration with external data and macroeconomic inputs. Advanced software allows forecasts to include inflation data, local and global, currency fluctuations, consumer price indices, government policy impacts, e.g., tax reforms, subsidies, data import sources, APIs from financial institutions, Excel sheets, ERP systems, e.g., SAP, Oracle, NetSuite, CRM, and sales platforms, e.g., Salesforce. Example, a Nigerian agritech startup can import crop yield forecasts, FX rates, and labor costs to generate an investor-ready financial plan. Section 7. Forecasting pitfalls to avoid. While digital forecasting tools are powerful, they can produce flawed insights if misused. Over-reliance on optimistic data, ignoring seasonality and external shocks, for example, fuel price surges. Failing to update assumptions regularly, not validating AI-driven suggestions, poor data hygiene, inconsistent historical records. Best practices. Regularly update assumptions, use conservative scenarios, backtest forecast models against past outcomes, reconcile forecasts with actuals every month. Learning outcomes. By the end of this module, you should be able to understand the role of forecasting in digital budgeting tools. Differentiate between short, medium, and long-term forecasting. Conduct what-if scenario planning using budgeting software. Apply forecasting results to guide business decisions, avoid common forecasting errors, and maintain forecast accuracy.